Is gold still worth it? War, oil, and your money. When investing in any commodity, it's all about timing and context. One of the strongest arguments for gold is that it acts as a hedge against geopolitical instability, wars, fragmentation, monetary inflation, and loss of trust between countries. In those environments, investors look for assets that aren't tied to any one government, and gold fits that role. It's a neutral asset, but what's interesting and often misunderstood is that gold doesn't just go up every time there's a crisis. You can actually see situations where geopolitical tensions rise and gold initially spikes, but then either levels off or even declines. And that's because gold isn't just reacting to fear. It's mainly reacting to variables like interest rates, the dollar, liquidity, and the world's central bank's reaction to the conflict. So even if a conflict increases uncertainty, it may also lead to higher real rates or a stronger dollar. This can offset or even overwhelm the bullish impact on gold, which means the relationship between geopolitics and gold is real, but it's not simple, and it's definitely not one-directional. As we discussed in the last video, the recent events of March 2026 perfectly illustrate this exact point. Gold initially surged when the Middle East conflict escalated. Early reaction, safe haven buying. But then gold fell sharply despite the ongoing war, down 13 to 15% after the conflict began. Why is this? Because rising oil leads to higher inflation expectations, but not monetary inflation. Reactively, central banks stay tighter with higher rates. This leads to a stronger dollar plus higher real yields. And this leads to downward pressure on gold as well. Geopolitics alone doesn't drive gold. Macro conditions determine whether the move sticks. Gold doesn't just trade on fear, it trades on the macro response to that fear. Scenario 1, limited contained conflict. What happens? Conflict remains regional with no major escalation. Markets initially react with fear and then normalize. Oil prices may spike briefly, then stabilize. Macro response. Central banks stay cautious or slightly hawkish. Real rates remain stable or slightly elevated. USD stays relatively strong. Gold reaction. Initial spike due to safe haven demand, then plateaus or pulls back. Fear alone isn't enough. If interest rates stay high, gold struggles. Scenario 2. Major escalation. Regional war expansion. What happens? Broader Middle East involvement. Oil supply disruption is leading to a sharp spike in energy prices. Global uncertainty increases significantly. Macro response leads to two possible paths. Path 1. Inflation shock plus tight policy. Oil-driven inflation rises. Central banks stay tighter for longer. Real rates rise or stay elevated. Gold outcome. Short-term surge, then suppressed or volatile. Path 2. Crisis leads to a central bank policy pivot. Growth slows sharply. Financial stress emerges. Central banks cut rates and inject liquidity. Gold outcome. A sustained strong rally. Escalation helps gold only if it leads to easier monetary policy. The easing essentially increases the monetary supply, leading to inflation. Path 3. Global financial spillover. This is the true gold bull scenario. What happens? War triggers banking stress. Credit tightens and leads to market instability. Macro response. Central banks intervene aggressively. Liquidity increases through QE or money printing. Real rates fall or go negative. Gold reaction. Strong, sustained upside. Key takeaway. This is where gold behaves exactly as advertised as a system hedge. I just want to briefly interrupt this video to thank you for supporting this channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Also, a quick shout out to one of this channel's sponsors, Augusta Precious Metals. With over a decade in the industry, Augusta is one of the leading gold investing companies for trust, customer empowerment, and prices. The company provides investment account rollover services to tax-advantaged gold IRAs, as well as a unique educational webinar and resources for their customers, helping beginning and experienced investors protect their retirement wealth with confidence. To learn more about Augusta Precious Metals, see the link in the video description to visit Augusta's official site to receive a free investing guide. Also, check out our video review of Augusta Precious Metals by clicking the link in the top right of the screen. Now back to the video. Path 4. De-escalation. A sustained peace resolution. What happens? Tensions ease. Oil prices fall. Risk sentiment improves. Macro response. Inflation expectations decline. Real rates may stabilize or rise. Risk assets outperform. Gold reaction. Gradual decline and stabilization. A simplified cheat sheet. 1. A contained conflict equals gold spike, then fades. 2. An escalation with tight monetary policy equals a volatile and capped gold price. 3. An escalation with a monetary policy pivot to monetary expansion equals a strong rally for gold. 4. The escalation of conflict equals a gradual decline and evening out of the gold price. Whichever of these scenarios is likely, will largely depend on the duration and the amount of liquidity and national debt resulting from money supply growth. Gold reacts less to the war itself and more to how central banks respond to it. Another factor, the geopolitical fallout of the recent large U.S. military interventions and the resulting divestment in the dollar as a result, play into the bullish case for gold. With increasing geopolitical tensions, the desire by world governments and central banks to seek a neutral asset that does not carry the same counterparty risk as a U.S. dollar will become more and more of a priority. Only time will tell, but waiting is not an option as an investor. Preparation is. And one rule has remained true and constant over 5,000 years. Gold has never gone to zero. Currencies have and will likely continue to. This has been a trend of fiat currencies throughout history, to take advantage of the volatility of gold and silver before their eventual resurgence. See the links in the video description to find the best gold investing company that suits your needs. Thank you for watching.